Small to medium-sized firms say that they need more financial support to not just survive, but to thrive. But amid a high interest rate environment, it also means that it's more expensive to borrow money from banks. And without the much needed cash, it may impede plans to expand their businesses or to go global.
More local firms say they will face funding issues this year. That's according to the latest survey by Singapore Business Federation. 11% of firms surveyed say they don't have enough cash reserves. This is 5 percentage points higher than 2022. For this startup, 2023 was a trying year to raise capital for its business expansion.
I think we probably pushed back certain potential projects because of funding issues, or at least just worry about cash flow issues. We are just being a bit more careful, and that's why some certain overseas plans were not. They were not shelved, but they just took a bit longer to happen.
Logics also avoided racking up a mountain of debt last year. Their patented cooling system is manufactured overseas. This means the company did not need to buy large physical assets like a factory. The firm also recently secured funding from a local bank to expand into Vietnam and Indonesia. In Singapore's manufacturing sector, some businesses say they are very cost-sensitive. Paying interest on loans or even the associated costs of borrowing money is a struggle. The Singapore Manufacturing Federation says more help is needed for these companies to overcome high costs. It is also encouraging these businesses to automate and cut their reliance on labour. If not, they'll face some risks.
So if they don't transition and go digital, whether it's automated manufacturing, digital, industry 4.0, 5.0 kind of concepts, where you are less labor intensive and just more automated, I think many will face the challenge of cost being their number one reasons why they fail their business.
That's why Singapore's Apex Business Chamber is pushing the government to help SMEs thrive in the year ahead. Measures like extending the Enhanced Enterprise Financing Scheme would be welcomed.
So we're suggesting that the government, taking into consideration today's environment, to keep the cap at $500,000 for at least another year, and also to consider perhaps a 70% risk sharing for businesses that need capital for business transformation. For example, to pursue digitalisation projects, to transit their operations to a more low-carbon operations, and to expand businesses overseas.
Looking ahead to Budget 2024, the SBF is pushing the government to help the SMEs with their cash flow. These include ensuring payments for services are made more regularly, instead of relying on a system of reimbursement.